Nike shares closed the session of June the 25th, 2021 at $154.35, an extension of more than 15%, hitting a record intraday high after the company forecast full year sales exceeding or reaching $50 billion as its North American business rebounds from the lows of the coronavirus pandemic. So according to Telsey Advisory Group analyst Christina Fernandez, Nike is benefiting from its closer connection with customers through its membership program, high full price setting, greater use of data, and a smarter wholesale model with strong partners like Foot Locker. So this direct marketing or this direct sale to consumers Nike has adopted is speculated or is believed to be the reason why it is doing well now. It is the reason why it's more than offsetting pressure in China and supply chain constraints. This direct consumer sale, it has since adopted. It has been pursuing this model of this strategies for some years now. And the question is, which other stocks are likely to follow this approach? It's expected that by the fourth quarter of this year, 2021, a lot of companies will pursue aggressively this direct to consumer model or this strategy. So which other stocks would they be? Because right now, $154 looks like a lot of money for a lot of recent market participants, recent retail investors. Which other stocks are likely to follow this trend we're looking at right now? Would it be according to Motley Fool? These are some of the stocks that they mention. Discretionary stocks. They obviously Nike's there. There's Starbucks, McDonald's, TJX companies, Disney. It doesn't really for us. These don't really ring that much of a bell as such. Even though TJX companies comes a bit close. It comes a bit close. Maybe because we are looking at it from the perspective of the fact that they are also in apparel business as well. But McDonald's, well, yeah, they're not really doing that already. Well, they can do it through other means, selling directly. They are doing that already, So would that suffice? I mean, would that be something that will affect their stocks in a different way? Well, what of the other stocks? What of the other stocks like ASICS, the Japanese footwear maker? What is it? Is it the sort of stock that you would want to get involved with? You think they're also doing the same thing as well? They're into direct to consumer sales as well, and we can see that something interesting is that the stock is not that expensive. You can see it's trading at $24.6, and we can see down here it says it appears to be correcting within a longer term bullish trend. Although its MACD is presently below the signal line, shares remain 59.1% above an upward sloping 200-day moving average. It's also outperforming the S&P 500. With this sort of results Nike has put out, would it affect ASICS? Do you want to get involved in it? What of Adidas? Adidas as well, unfortunately, also, if price is a problem, it's even more expensive than Nike. The same thing applies here. I think it says it appears to be correcting within a longer term bullish trend. Although its MACD is presently below the signal line, shares remain above an upward sloping 200-day moving average. It's also outperforming the S&P 500. Or would it be these consumer discretionary or these other consumer discretionary stocks, Genuine Parts, Target, L Brands, LQ Corp, Low companies? Which of them would it be? Well, all I can say is that this ASICS looks by far the most appealing of all of them so far. We have not done an in-depth analysis or breakdown to see which will be the best. Just looking at it from the price perspective, it is not in trading in triple digits, and it's also trading in the lower double digits, simply based on that. And obviously fundamentals are not exactly dodgy or anything like that. It's not totally not the case. All I can say for sure is that it is very, very, very important to have these sort of discretionary stocks in your portfolio, even if it's not going to be for the long term, at least in the medium term, at least up to 1 year from now on. These companies, I think they will continue to follow this aggressively, pursue this DTC, the direct to consumer approach. They will bring it to the fore further. They will focus on it more, because Nike, which is by far the most prominent of I would say the most prominent of all of these discretionary stocks, it has a company that has continued to reinvent itself, associate itself with what's going on right now. When they do something, you would want to follow them. And indeed, these other companies we mentioned, ASICS and Adidas, have been following them. They have been doing direct to consumer for some time as well, just as early as whenever Nike started it. I think as way back as 2018. Correct me if I'm wrong, if it's beyond that or later than that they started. But these companies have been doing that. But they expect a focus on these discretionary stocks, and indeed it may not just be ASICS and Adidas. It may also include those are the ones, McDonald's, Starbucks, TJX companies, and indeed it could also include these other ones, the Genuine Parts Company, Target, L Brands, LQ Corp, Lowe's companies, and all that stuff. So see what you're going to make out of these stocks, and see what we have in the description box below. We will come back to you again and update you. So thank you very much for watching this video.